Welcome fellows, today we will talk about crypto and of course Bitcoin as it's the alpha male. Stay with us because this is the ultimate guide for beginners and cryptocurrencies. After watching our video you will know exactly what is a cryptocurrency and a small history, what is Bitcoin and why is the most important so far, how safe are crypto and investing in crypto, what crypto to choose as there are so many options, investing in Bitcoin, and will you get rich like all those people claim? So stay tuned. Please keep in mind that this video is for entertainment purposes only and has nothing to do with investments. I am covering the Bitcoin in a different series weekly and you can find the link in the description below. So let's begin. Back in the 80s, David Lee Chaum, an American computer scientist, cryptographer and inventor at Berkeley University, introduces the idea. He's known as the pioneer in cryptography and godfather of cryptocurrencies. Later on, in 2007, a person or group of people with pseudonymous Nakamoto appeared. Nakamoto stated that to work on the writing of the code for Bitcoin. On 18 of August 2008, he or a colleague registered the domain name bitcoin.org and created a website at that address. On 31 of October, Nakamoto published a white paper on the cryptography mailing list describing a digital cryptocurrency titled Bitcoin, a peer-to-peer electronic cash system. But what is a Bitcoin and what are the unique features from cryptocurrencies that we can use in our day-to-day transactions? So you want to buy something. Let's say you want to buy this doll for 25 GBP. How would you do it? Well, the steps are very simple. You would give your card to the shop. Then the shop will ask the bank to verify if there is enough balance to proceed with the transaction. The bank will check your account, will check the balance, and if the balance is there, they will proceed with the transaction. And what they do, they will update the records, and of course they will keep a fee for their transaction. But here comes a very tricky part. How can you exclude the bank completely from the transaction? I mean, who would you trust? Definitely not me. You don't know me. Maybe you don't trust your uncle also so much. So what are your options? Who else would you trust to keep those records from your transactions without alter them or cheat in any way? You wouldn't trust somebody, but for sure you would trust everybody. And here is how it works. We will proceed with the transaction, but this time there is no bank to record it. The transaction will be recorded in everybody's ledger. This makes it impossible to alter or cheat the data. Every single user has the same ledger and the same transaction recorded. So if you try to cheat in one of your transactions, then everyone will verify that this transaction is fake because everyone has the correct details. That's why the cryptocurrency technology can guarantee your safe transactions every time, because the transaction is not recorded in just one ledger, but everybody has the same information and everybody can verify the correct details. We explain how cryptocurrency works so far, but what makes the Bitcoin so unique and why is the most important? Well, the answer in this question is very simple. The Bitcoin was the first cryptocurrency that ever created. Despite the high volatility, the Bitcoin market managed to reach more than 1.1 trillion in capitalization. No one absolutely expected this spike in prices. Started from a couple of cents and almost hitting at 70k.
What is it about Bitcoin that gets you guys so fired up?
I bought a farm in the 1980s, and every year look at how much it produced the way of soybeans and corn. And at the end of that period, I've still got the farm, and I've gotten some significant income off of it. Apartment house, operating business. But if you and I buy various cryptocurrencies, they're not going to multiply. They're not going to be a bunch of rabbits sitting there in front of us. They're just going to sit there. And I got to hope next time you get more excited after I bought it from you, and then maybe I'll get more excited and buy it from you. And actually, we could sit in the house by ourselves, and we could keep running up the price between the two of us. But at the end of the time, there's one Bitcoin sitting there, and now we got to find somebody else, and they come to an end. I mean, those.
That's a greater fool theory. That's what you're saying?
Well, yeah, it's buying something because you expect the pool of people who want to buy it because they want to sell it to somebody else.
You can find the link for the entire interview in the description below. Buffett tries to argue, and it is a fact, that cryptocurrencies doesn't produce anything, any substantial value, either tangible or intangible, and this is true. However, you cannot compare apples with oranges. The cryptography and the blockchain application we explain produce value in another way. Just stay with me on this. In my opinion, he has not fully understand what is cryptocurrencies and what they can be used for. And here comes the value that I mentioned earlier. Cryptocurrency is a digital or virtual token that can be used also as currency, but used as currency is not its primary purpose. It is secured by cryptography, which makes it nearly impossible to fake, cheat or alter a transaction. A double spend transaction is impossible to occur. Another important value is the security that provides in data circulation. They don't need any centralized system to work, and there is no central banks that owns the control like the normal currencies. It sounds very revolutionary, however, this is how they work. In my opinion, this is the reason that they've got so much reputation and value. And for sure, it's not a bunch of rabbits playing around, waiting for someone to buy them. No doubt, from an investment point of view, they are very volatile. Bitcoin has lost 20% of the value, 30% of the value, and even 60% of the value. But this is normal as we are talking about emerging markets. But in the final conclusion, every single asset, stock, commodity, or anything out there that you can buy or sell had some extreme moves based on the market conditions. Between October of 2012 and July 2013, those 9 months, the most valuable metal lost over a quarter of its value. And we are talking about gold. But this is how the market works because it's unpredictable. And every time we are mentioning anything related to investment, always there is a risk. Previous historical data doesn't guarantee future results. And here comes the question, and of course the answer with this video. If Fed is working on a digital dollar.
Last month unveiled the world's first digital currency from a major power. Currency that would not be printed but would exist only in cyberspace on your phone, for example. Is the Fed working on a digital dollar?
We are actually evaluating that. Most major countries are now looking at the possibility of having a digital currency and really asking the question, in our very modern advanced economy.
So as we explained so far, Bitcoin is by far the most important cryptocurrency due to its popularity and of course because it's the first crypto that ever created. But since then, since the first cryptocurrency created and coming to 2022, there are more than 12,000 cryptocurrencies out there and they are growing with an astonishing rate. And of course, here comes the main question, what cryptocurrency you should choose. Please keep in mind that this video is for entertainment purposes only and we do not give any investment advices. I will drop a link in the description about investment for beginners. However, investing is always risky. So I will come back to my main question related to what cryptocurrencies to choose. Based on the market analysis and the data we have so far, the most popular and the market with the higher capitalization is the Bitcoin. Practically, if you do a small research yourself, you will see that all currencies follow the Bitcoin. As we said, investing is always risky. However, this is part of diversifying your portfolio. Investing a very small amount in cryptocurrency will also help you hedging against inflation. And don't forget who produces the inflation.
Yes, sir. In a recent interview of U.S. News and World Report, Secretary of the Treasury Blumenthal blamed our current rising inflation in a large part on our foreign trade and unions. He did, however, say that the government was little to blame. Would you like to comment on that?
Yes. Unfortunately, it is one of the defects of our political system that we always put a Secretary of the Treasury and other high government officials into a position in which, when they make public statements, they are almost driven well, what's the word I want to use? I want to use a polite word, equivocate. Secretary Blumenthal knows as well as you and I do that inflation does not come from trade unions. That doesn't mean that trade unions aren't grasping. Of course they are. But they don't produce inflation for one simple reason. They do not own a printing press on which you can turn out green pieces of paper. The only such printing press is in Washington. I say printing press, of course, in the modern age we do it in a more sophisticated way. We use bookkeepers and accountants and computers. But it comes down to the same thing. Inflation is made in Washington because only Washington can create money. And any other attribution to other groups of inflation is wrong. Consumers don't produce it. Producers don't produce it. The trade unions don't produce it. Foreign sheiks don't produce it. Oil imports don't produce it. What produces it is too much government spending and too much government creation of money and nothing else.
We have explained many times and we have done several videos about inflation and how it can be created. And at this point, we need to give some further explanations why to choose Bitcoin. Provenly, the market capitalization of the Bitcoin reached almost 1.1 trillion, and this is a fact. The same people, the same organization, the same institutions that were against the Bitcoin now have changed their mind completely. Morgan Stanley initially claimed that the Bitcoin value will drop to zero. However, several months later, they changed their statements by estimating the true value or the fair value of the Bitcoin at approximately 38K. There is no doubt that the market has several ups and downs and very huge volatility. Of course, in my opinion, this is normal as we are talking about new markets and emerging markets. Investment is always risky and we are not talking about only the Bitcoin here. However, in this chapter, we will talk about the Bitcoin and why to diversify your portfolio by investing a small amount in the Bitcoin. Several people claim that the value will drop to zero. However, the Bitcoin from a couple of cents reached almost 1000 USD, and after exceeding every expectation, hit 10,000. Back then, we are start hearing the same fairy tale, that the prices will drop to zero and eventually everyone would lose their money. However, they were wrong. The prices not only dropped down, over exceed 20,000 for one single coin. The Bitcoin started gain popularity and increase in value, breaking the one record after the other one. Breaking the 20,000, breaking the 30,000, breaking the 50,000 and almost reach at 70,000. And the same people who claim that the value will drop to zero start changing their opinions by presenting a fair or a true value of the currency. No doubt it's a very volatile asset as we explained, and almost losing 60% of its value as up to date, standing at 25,000. The potential of this market can be literally limitless. The entire cryptocurrency market reached almost 2.3 trillion capitalization. This is an astonishing record, and we have to keep an eye on it. Of course, we don't know where the prices will go, because no one can predict the market. However, every single evidence is there. The technology is there. The potential of the market is there and proven. And I won't talk only with numbers, even though it's the only thing that we can capitalize on. Bitcoin has become more and more popular. We all know that the market moves in cycles. So if we assume that this is another cycle, we have no idea where the prices might go in the future. For sure, I'm not a market analyst. However, I still have some basic knowledge in economics. But this also can apply to everyone. Everyone can do a small research and verify the data and what's happening. I will drop a link in the description that I am analyzing more the Bitcoin, the market capitalization, and some more technical terms. So, will you get rich from the Bitcoin if you are start investing in it? Well, everyone knows the example with the Bitcoin and the pizza. That true story that on May 2010, someone exchanged 10,000 Bitcoins for a pizza. Of course, back then, the value was insignificant, and this is the reason that this transaction occurred. However, if you had 10,000 Bitcoin today, or at least in the maximum market cap, you would have approximately 700 millions. Of course, no one can predict the market, and you don't have any time machine to go back in time and inform yourself to buy a couple of thousands of Bitcoins. But I will answer this question by saying another story and how the market works. For sure, we don't know, or we cannot predict exactly where the market go. However, we know some basic mechanism and how the prices are moving. And I will explain you with this simple example. Fundamentally, the most important rule in the market is based on supply and demand. In order to sell something, there must be someone that is willing to buy it from you. We are not talking about some extreme marketing scenario that, based on advertisement or some other tricks, they are forcing you buy 1,000 useless things. We are keep discussing about the major theory. So, if you want to sell a Bitcoin, let's say, you must come into an agreement with someone that is willing to buy at the price. This means that buyers and sellers will come in an agreement, and of course, as we can see, the prices might go higher, might go lower, and so on. Let's give an example. Let's say that we have John. He manages to get some Bitcoins, let's say at a price of 1,000 USD per coin. John is the average person, the average retail person. I mean, he doesn't know how to trade, he doesn't know some basics and so on. He assumed that this might be a good opportunity for investments and why not to make some profits. A couple of months later, the value has significantly increased. Now that one Bitcoin that initially bought now costs 5 times more in the market. And John knows that now he can sell the same coin for 5 times more. I can guarantee that most of the 90% of the people think with the same way. They will sell their coins and they will be happy because they will get 5 times more than the initial value. Several months later, they might regret because the value didn't get only 5 times more, but even 10, 15 or 20 times more. The average person is not a trader, and for sure no one can predict the prices in the market. Most of us would do the same. And this is the core of the market theory, as I explained. People start watching the prices going higher, and most they start diving also in the markets, but this buy and sell game continues. Practically no one kept their coins enough to get at that point. You understand that I'm trying to oversimplifying the situation and give an explanation with this example. But most of the time, when it comes to market psychology, this is a fact. When you see your initial investment going 3, 4 or 5 times more, most likely you will sell. No doubt, there are a few people that hold the coins from the beginning. Of course, we cannot estimate the numbers, and we don't know exactly who were the initial Bitcoin holders that still hoarding their entire portfolio, or they might increase. Most of you initially, you never had the idea of buying a Bitcoin or acquiring a Bitcoin. Of course, because no one of you, no one of us knew exactly where the prices would go. But still, based on the market analysis and based on the data and what we've said in this video, you can, if you have the ability, of course, to invest, because we have analyzed that in another video, start investing with very, very small amounts. Again, previous performance doesn't guarantee future results. We have said that several times. However, this is one of the best practices. You don't have any time machine to go back in time. So in this case, you don't want to lose any future prices moves. By investing or purchasing small amounts each time, of course amounts you can afford to invest, I can guarantee that most of those people that claim that they have millions in Bitcoins, for sure they might own nothing. And this is a fact, as we explained, for most of us. And always remember, you miss 100% of the shots you don't take. Thank you very much for watching our video. I hope you enjoy. Stay safe, and I hope I'll see you in the future.